So how much CMHC insurance would I have to be paying? That's where our calculators come in. Let's have a look. When you're purchasing a home less than $500,000, the minimum down payment is 5%. If the home is priced between $500,000 up to $1.5 million, on the first $500,000, the minimum down payment is 5%, and anything between $500,000 up to $1.5 million, the minimum down payment is 10%. So if you're buying a home around $800,000, then the down payment would be roughly about 7%. If the home is above $1.5 million, then the minimum down payment required is 20%. And when it's more than 20% as a down payment, no CMHC insurance is required. So let's look at how much CMHC insurance we would have to pay if we were buying a home with only 5% down. I'm buying a home for around $450,000, and you would hit calculate. Once you hit calculate, our calculators will give you 4 different scenarios, which will show you exactly what's the minimum down payment required based on the purchase price. Because remember, the down payment is always based on the purchase price. So we'll give you 4 different scenarios. First scenario is based on the lowest down payment, which is 5%. Second scenario is based on 10%. Third scenario on 15%, and then the fourth scenario based on 20%. And as I mentioned earlier, when you're putting more than 20% down, no CMHC insurance is required. So let's review them. I'm a young professional, I'm putting 5% down, my minimum down payment is $22,500. My CMHC insurance that I have to pay because I'm putting less than 20%, 5%, is $17,100. My total mortgage is $444,000. This $17,100 CMHC insurance, you have the option to include this as part of your mortgage or pay this at closing as part of your closing cost, your choice. If I look at scenario number 2, which is 10%, my final mortgage is $417,000. Of course, I'm paying less CMHC insurance because I'm putting a bigger down payment. If we look at scenario number 4, where I'm putting 20% down as a scenario, then there's 0 CMHC insurance because if you're putting 20% down, no CMHC insurance. This is a good incentive that the government has because it is a way for us to step into homeownership quicker and faster. And the sooner you do it, the better. Because remember, as years go by, home prices increase in pricing. So the sooner you do it, the better it is for you. Hope this video has helped you, and of course, remember when you are asking yourself if I should rent or buy or even step into homeownership, there are 3 questions you need to answer. One is, can you afford down payment and closing costs? This is part of your closing costs. Number 2, can you afford carrying costs? Can you afford all the monthly mortgage payments, taxes, and utilities month after month for the next 30 years? And number 3, is it cheaper to rent or buy? Once you answer all these 3 questions, then you are on your way to homeownership. You cannot look at buying a property if you don't have these 3 questions answered. And of course, keep watching our videos, visit our website for more information, and attend our first-time home buyer seminar.